There it is. All right. So with that, Brian, I'm going to go on mute and I'll let you take it
Sure,
from here. Thank you,
sure.
sir.
You didn't tell everybody that our morning announcing is kind of like dodgeball. You know, the two guys. It's kind of like what we do. We have a good time with it. All right, everybody, welcome. I'm gonna just jump right into things. I will definitely hope to stay under my time limit today, and I'm typically pretty good about it. But for those of you that have seen me in the past, I get very, very passionate about this. I do talk quickly. If I'm talking too fast for some people out there, I do apologize. I'm an East Coaster, obviously. I give Todd a hard time, though. Chicago is not the center of the trading world. It's New York. I'm that side. I don't live in New York City, but again, I do talk a little bit quick, so I will apologize right off the bat for that one. With that said, what we're going to do today is, and for those of you that normally know me, I normally go with the really soft slides and the whites and the blues and the grays to make it soothing so you guys could read. I went super edgy today on you guys. I went black because just with the laser beams going through the bright colors. And the reason why is because what I'm going to share today is probably a little bit different than what most people would assume would be the way to day trade. All the things that we hear out there where people are giving us this strategy or that strategy, and a lot of it's more swing trade or long-term positioning. I'm a fast get in there, get it done, and get out type guy, particularly with Nadex, just by the way that the contracts are formed. And what I'm going to ask you today, and especially if you're new, is I really want you to start doing things completely differently than the way that you thought you should. And with that said, let me go into my Nadex risk disclaimer before I get too far into it, because like I said, I'll be 5 slides in and forgot that I even had slides. So for those of you that don't know, trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost of another transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and your financial resources. Now, any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. None of the material presented here is to be construed as a solicitation, recommendation, or offer to buy or sell on Nadex or any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. All right, now that mouthful is out, let's dive in. So, just so you guys understand where I'm coming from and kind of why I'm willing to share kind of this short duration kind of strategy with you. As I mentioned before, I'm the president and CEO of Keep Trading Simple. I partner with Nadex. I've been working with Nadex now for approximately 3.5 years, I think, at this point. Time is flying. And really, every presentation, I want the students that are attending and the traders that are attending to get some type of, lack of a better word, like a golden nugget, something new that you guys didn't know or a way to look at things differently. Now, I started trading back in 2000. I was a retail trader. I'm not a 12th generation trader. My dad, grandfather, they were not on the trading floor. All right. I am a retail trained trader. All right. Found stocks and options back in the tech bubble in 2000. Did that for a matter of time, about 6-7 years. Found foreign currencies, fell in love with that market. Went to a company to learn how to teach, to teach people how to trade the markets. Became a financial advisor. I assumed that, hey, listen, the next step for me in my personal growth would be, let me go on the inside. And I work for one of the big 3 banks, and I really learned about bonds and the relationship that bonds have with the overall market. But realized very fast that as a financial advisor, I would not be analyzing charts, looking at stocks, and helping people grow their accounts. It wasn't about that. As soon as I found that, I left very, very, very fast and went back out and continued to teach again. Now, I've created a number of courses down here below. Today's presentation is not about these, but I want you guys to understand kind of what my background is and why I'm telling you about short duration contracts. All right. Courses like, and I don't know if you can see my cursor or not. I feel like you guys can't, but Nadex News Trading, the 30-minute trader program, the butterfly course, these were all meant to be shorter duration contracts for people that had, or shorter duration trading strategies for people that had full-time jobs. If you guys read the rest of the bio, I'm going to save it. You guys can read it if you'd like. But, my primary function, as I tell everybody, is I'm a stay-at-home dad, right? I trade, sure. I'm very specific about when I'm trading, how long I'm trading for, but I take care of my 2.5, 3-year-old daughter. And those of you that have attended the sessions, I actually do have a little one on the way. My wife and I are 10 weeks along. So, come October, I'll be going back into the no sleep mode again. So again, I love my kids, I love my family, and I don't believe that traders need to spend 12, 18, hours a day sitting in front of a computer. Use technology. That's why we have it, right? And again, I've created those courses for those, people. I've also created a couple other ones that really kind of meld into this as well. obviously a 5-minute binary course. 5 minutes is obviously a shorter duration contract. It's one a lot of students come to me for, these little kind of tiny little contracts. The parabolic retracement course was one that was meant to be really taking advantage of news bursts. And again, this kind of presentation today is really kind of how to capture those news bursts, and then this is how to play it after the burst happens. And then obviously high volatility trading. That's what we had last year. And really, it's still, things still happen all the time, and we still do have high volatility inside of the market. So again, another one of those courses, taking advantage of shorter duration contracts. And then mastering 2-hour range is actually not a course that I have. It's actually a presentation that I did for Nadex. I believe you can find it on Nadex's YouTube page, as well as, I think it's on the YouTube page, but I know it's definitely inside of the speaker section under webinars. If you go to nadex.com and go to like webinars archived and search my name, you will be able to find that one. I do find that that is a very handy kind of tool to have. If you're not sure what ATR is, if you're new, average true range is, everything is explained in that course and exactly how we use it to make ourselves better traders. So again, these are the different courses and strategies and things like that I've put together for students, as well as shared with Nadex. And that's why I wanted to kind of present this. How do we laser focus our trading? How do we really take advantage of the ideal kind of time frame during the day to trade, and not spend 12, 18 hours a day sitting here just watching charts, because it does get boring. It's rough. All right. So what we're going to do first today is I'm going to break down what classifies as a quote short duration contract. Okay. Now you see here it says contract. I'm not just saying binaries. I'm not saying just call spreads. I'm not even just saying knockouts. There is all three of those that will work for this, and I'll kind of break those down, which ones matter. Then I'll talk about the potential advantages of the shorter duration, right? Everything in trading and everything really in life has pros and cons to it. I want to go over why I would say I believe that the shorter durations are better. In this current trading environment, there are some environments where the longer ones are better, obviously, right? But right now, with everything we have going on, I'll tell you why I feel that those are potentially a better, more advantageous. Then let's talk about contract specs. All right. Now, if you're new to this, you may have absolutely no idea what I'm talking about with contract specs. Contract specs are important because you got to understand what gives us the greatest opportunity to be successful, right? I mean, if a simple analogy on this one is, what's going to work better? Rolling a round kind of spherical object up a hill or a cube, right? A lot of people are trying to trade with a cube, pushing it uphill, versus using a ball, which will roll a little bit easier, right? Contract specs really kind of dive in to say, which one is the best one should I be using? And I get that question all the time. If you're new today, you may be saying, well, I don't know, would I just use binaries for everything? Like, why would I use a call spread? Why would I use a knockout? Very valid questions, and there are a time and a place for all three of them. Then we're going to talk about session opens, and session opens are it's really the best time to use this strategy. I'll use some terminology later for it to kind of explain it, and you guys will see. It's very easy to show in the charts. If you guys have any charting experience whatsoever, you probably have already seen this before. And what's interesting is a lot of people tell you to avoid those times, right? The quote experts will tell you, hey, avoid those times. It's too volatile. You don't want any part of that. Really? Because that's the best time to do this. It's the best time to trade. It gives you the most movement, and that's how traders make money typically, is through movement. Obviously, there's neutral strategies, but it's funny. The supposed pros tell you not to trade these, but these are some of the best opportunities that exist. I guess they don't want to share. And last but not least, news. And you guys know I absolutely, if you guys have ever heard me, I absolutely, without a doubt, love news. I think news trading is the best thing. It's a way for you to really shorten the amount of time you need to be in front of a computer. And again, to give yourself that opportunity to make some money. Again, not just sitting there watching paper dry, taking advantage of when movements happen. Now, let's talk about short durations. All right. Now, obviously, binaries come in there. There's a number of different binaries that we can use. Right. We can use the 5-minute and the 20-minute. And again, if you aren't sure what those are, the 5-minute are currency binaries. The 20-minute are indice binaries. And then more or less everything has 2-hour binaries. Most of our focus is going to be within that, probably the 2-hour range today. And I'll show you why when we jump into the contract specifications, why the 2-hour binaries are my preferred trading method. Not that you can't do things with the 20s and the 5s, and I have different strategies for those as well, but why I feel that to give ourselves the best possible opportunity that I believe that the 2 hours, in my opinion, are the best. Now, can you use 7 a.m. and 11 a.m. daily binaries as well? And the answer is yes. Okay. Are they considered short duration? Not really, but they can also be used for the same purposes that take advantage of some of the same kind of benefits that we are trying to target. You may say, well, 7 a.m. the market's not open. You're right, the market is not open, but the US trader has not stepped into the market yet, and we can take advantage of the UK trader during that time. The 11 a.m. is also good because it's really a short duration. It's a daily contract with a short duration. It does have some things that it is not as advantageous as maybe, say, the 2-hour intraday binary, but sometimes the strike prices just line up a little bit better. And again, there is a little bit of a delay from the time that the strikes get printed to when they actually get, I guess when they get assigned to when they get printed, when we can see them. And sometimes prices already moved a little bit. So sometimes the 2 hours are not ideal, and we can use a 7 a.m. or an 11 a.m. Now, can we use call spreads for what I'm about to teach you guys today? The answer is absolutely. All right, there are 2 hours. You can dive in there and trade some of the 2 hours. Now, there's not as many things that we can trade inside of that realm with call spreads. Could you use the 5-hour ones? Yeah, you could, but they're not as ideal. I would really stick with whether the binaries, the 2 hours. Again, keeping it small, right? Keeping it smaller helps us reduce our risk. And that's where I would say kind of the sweet spot is for this. Now, could you use knockouts to try to do the same exact thing? Sorry, grabbing a quick drink there. The answer is yes. Okay. You could use knockouts for this, but, and there's an asterisk next to this. The but of this is they don't work as often. Okay. For this strategy. Okay. The reason why is we're taking advantage of time frames that are, again, they happen every single day of the week. If you can catch a knockout bracket, right, near the floor or the ceiling, it kind of does the same exact thing that we're looking to do by taking the shorter duration. But, and again, this is a big but, we got to make sure we are very close proximity to the ceiling or the floor. Now, could you take it in the middle of a contract? Sure, you absolutely could. But the caveat to that is you're going to be taking on more risk. And if the market is very unpredictable and kind of goes against you, you could lose a lot, right? More than what is necessary with a knockout than versus what you could have taken in a binary realm. So remember, it's about picking what's going to be best. And the title is laser focused, right? So could you do it with knockouts? Sure, but there's not as much opportunity over there. And again, don't get me wrong. I absolutely love knockouts. I think they're a great product that Nadex has. I think for a lot of different things out there, they are they are my go-to, right? But for something that's extremely short duration, I don't think they match up as much for this strategy. All right. And again, that's why they have binaries. That's why they have call spreads. That's why they have knockouts. They're all for different situations. Okay. Now, let's talk about the potential advantage of these short durations. Now, the first one, and in my eyes, is the absolute, hands down, most important, advantage that we could have here is the smaller strike widths. Now, if you're new, you may say, I don't know what the heck a strike width is. Basically, when binaries are printed or anything is printed, there is a width between individual binaries, okay? Maybe it's 1 higher, maybe it's 5 higher. That width helps us. Now, this is a conversation that I've had with Todd, and I've sent messages across the Nadex about, some of the binaries that we have out there have 21 different binaries that are printed, right? Having a smaller strike width means that we have more potential to jump over more strike prices, hence helping us lower risk and things like that, right? Versus a daily where they're absolutely huge. This gives us the ability to kind of, again, jump multiple binaries, right, in a short amount of time because of the tiny width between binaries. All right. So again, that's the biggest advantage why we're using, or potential advantage why we want short durations. Now, the next one is we can really focus in on higher movement times. Think about it. The markets are technically open 24 hours a day, right? We pretty much trade just during specific business hours, but like currencies are open 5.5 days a week, 24 hours a day, right? Transactions are happening. There's after hours trading, futures is open for the most part, like 23 hours a day. So by using a shorter duration contract, we can focus on the highest movement times, again, coupled with these smaller strike widths, and then we don't have to worry about all just watching the paint dry the rest of the 20 hours a day, right? Think about it. If you got an hour a day that you can trade, what are you going to trade? The slowest hour of the day or the most volatile time of the day, right? It's a simple answer. There's only one way, right? You want to focus the time that there's the most movement because that gives you the most opportunity to make money. Now, smaller time requirements is kind of what I'm bleeding into right now as well. Again, if you have 12, 18 hours a day that you want to sit here and watch this, go for it. Definitely, I can give you some strategies for that. But most people don't want to do that. As I said, I take care of my daughter at 3. She runs around the house. I coach lacrosse for my sons. They're 11. Virtual schooling, I've been helping them with that. So again, I'm a busy individual. You know, I don't just sit here all day long. I do a lot of things. I teach students. I do webinars for Nadex. I do webinars for my own students. I have to be very specific about when I'm going to find time to trade. And when I am, I need to make sure that I can be 100% focused. And again, it's an opportunity. It's a time of day that is good, right? But again, knowing what I know now, I can kind of pick each day, like, listen, this time I'm going to block out here, and this day I'm going to block out over here, and this time I'm going to block out over here. You guys get what I'm saying with this? It doesn't require as much time because I can say, hey, listen, I know that X, Y, Z is happening at this time. I need to be there for that. I can look at it for pre and post and be able to make it, trades off of that, right? Another one of these potential advantages is more controllable risk, okay? With a smaller strike width, right? And you guys will see this in the chart. With a smaller strike, width, there will be more binary strikes within a kind of price block than if I had been using a daily, all right? So what I can do is I can actually position myself, right, to keep my risk at a minimum because there are more strike prices there. And again, I'll show it to you in the chart. You guys will understand it. I just want to label this out to kind of get, the seed planted for right now, all right? So I have more controllable risk because I have more strike prices in close proximity, which is number 5, closer proximity to price. Okay, the problem with the dailies are they got huge strike widths and it may be like in the middle between two of them. Well, the shorter duration, they're so much closer together. We're much closer to an at the money, right? At all times. So I'm closer in proximity to price. Hence, I'm able to kind of control where my stop loss is, my technically drawn stop loss. As you guys know, if you're new to trading, whatever the cost to enter your transaction is at Nadex plus $1 per contract to get in, that's the most you can lose. There's no way it can go more against you than that, right? You could have a drawn stop loss on a chart, and this way, again, the shorter durations, the smaller strike sizes helps me stay closer and closer and closer to my point where I know I'm absolutely wrong, right? And again, big advantage. Now, you may say, well, some of these things could be true for longer durations, and they could. Obviously, the smaller strike list we know is not true, right? Higher movement times, yeah, I could trade a daily, and again, there's a lot more time where it does nothing and just goes sideways, sure. Smaller time requirements, yeah, sure. I mean, I have a course of, called Overnight Trend Trader where, we look at the overnight trends to take advantage of it. And again, yeah, we use dailies for that. But again, a lot of that is you not even being in front of the computer, and not everybody's necessarily ready for that, right? Or kind of mentally prepared as a trader to trade like that. A lot of people need to be there and be in front of it. More controllable risk. Again, Nadex gives us controllable risk pretty much for every contract. It's just I'm saying it's more controllable risk because of the proximity. All right. So again, maybe a little bit more of an advanced concept, maybe not. All right. So let's look what we're talking about here. All right. So here's an example from February 25th. All right. In looking at this, you may say, all right, what am I looking at here? You're looking at the S&P 500. All right. Where the yellow box starts on the right-hand side, right? And I don't think you guys are able to see it now. For some reason, it doesn't want to pick up my cursor here. But if you're looking at this, the yellow box starts at 6 p.m. Eastern Standard Time, basically when the market is done in the United States. And that yellow box goes till 9 a.m. Eastern Standard Time when the markets are opening. As you can see, for the most part, until that 3 o'clock window, if you look at the bottom of that chart, you can see where it says 03, :00. That's 3 a.m. That's when the London Open happens. You can see there was pretty much zero movement, right? Almost zero movement until that time. And then finally, we get to the European Open. And from the European Open at 3 for 6 hours, it dropped a total of 28 points. All right. So in essence, we can say in the overnight from when the market closed, the futures contracts reset, Nadex contracts printed, it dropped basically, and again, that wasn't actually at the high, about 25 points total, okay? Could you have taken a binary contract, right, a daily contract to trade that one short? Sure, you absolutely could have. You wouldn't have seen much price action. You wouldn't have seen much movement. And in fact, your premium would have been kind of disappearing as that time value started to go. All right. Now we get to the green box. Green box is a bell. All right. And all of a sudden, what happened? The price goes crazy. And what does it do? It goes straight down for 104 points. Okay. As you can see, a lot of the volume and a lot of those peaks are stacked up between 9 and 12 in the morning. And that's exactly right. That's what typically happens. That's where most of the volume occurs during the day, right? And then it starts to kind of belly out. And then there's one final spike, which is basically at the closing bell, that last 30 minutes of trading. But you can see, as far as price action is moving from the US Open at 9, right, to noon at lunchtime, we dropped 104 points, almost 4 times higher than what we saw from the 6 to what, 15 hours later. It took 15 hours to move 28, and then all of a sudden, bam, we get 104. And then what happens from noon is we get a little bit of a rally, a little bit of a pullback. And again, looking at it from basically noon till closing, it dropped about, what, 2 points, right? About 2 points. So in looking at this, trying to say, hey, listen, if I had to pick a time, what is the best time for me to figure out when the most move is going to occur? This is a great diagram, and it shows you in the overnight, there's not much. From, you know, the morning session, that really from 9 to like noonish time period, there's a lot of movement. And then what happens in the afternoon? There was a little bit of a rally of 35 points, and then it literally fell right back again, dropped a little bit lower and closed. All right. Now, if you look at the bottom left-hand corner here, you can see we did a binary comparison. Okay. And talking about this. So at 2 hours, say 9 to 11, right? 9 to 11, there's a sweet spot there, right? We know that that's where a majority of the movement happened. It dropped 104 points. And you can see the 2-hour binary contracts, right? The width of that one is 3 points. All right. So again, this is 2 hours, cut that in half, say it's 50. Do some simple math here. If that was, and because it is a pretty consistent kind of drop there, if it moved 50 points in that 2 hours from 9 to 11, how many strike prices did it jump over during that time period? Versus if I was in a daily, right? If I was in a daily, how many did it move as well? Okay, it's over double the amount inside of that small contract within 2 hours. If I'd use a weekly contract, yeah, it may have jumped 1 strike price to the downside. But again, you know, we got a couple days to go. You know, there's a lot of time value kind of cranked into that one. There's a lot of things going on. So again, when I talk about laser focusing, this is about taking advantage. And again, if you can block off an hour of time to set your trades, you guys can see where the opportunity is, right? Why use a daily contract when I can use a 2-hour contract that makes me move half as far when all the movement really technically happens in 4 hours, right? So hopefully that kind of resonates with you guys. And again, what I want to happen right now is I want you guys to kind of, but does Nadex not offer stop losses? Leonard, the stop loss is actually kind of included in the contracts, okay? It's included as part of the contract when you enter it. But good question, excellent question. Jay, this is all Eastern Standard Time. I live in Maryland, right outside of DC. So yeah, this is all Eastern Standard Time. But what I want you guys to do is I want you to look at this slide, and I want you to take what Todd and Dan have both talked about, the strategies that they've mentioned, right? And start thinking about this, right? I mean, looking at this, and I'm not sure which one Dan did. I was unfortunately unable to, to jump in today. But I mean, Dan has taught some like delta neutral strategies, right? Where price is not really moving. I mean, if you know a strategy that you could trade that when there's no movement, could you trade that from the 6 to 9 a.m., 6 p.m. from the previous day to 9 a.m.? Yeah, that looks pretty sideways to me, right? And then again, all of a sudden, crazy movement. You want to do, hey, listen, maybe I'm going to trade a breakout or one of these short duration contracts. Yeah, absolutely. And then after lunch, is trading the best time after lunch? Maybe for something small, but are you really getting the trend change or the trend movement? And the answer is no, not really. Is it every day? No. Some days you'll have, European session, but again, it's about learning what you're trading. So again, I want you guys to kind of think a little bit differently about that. Now, let's talk about contract specifications. All right. At this point, the juices should be flowing. You may be saying, all right, this is interesting. I may be able to do something with this. Well, how do I find out what the strike differentials are? Well, if you guys go over nadex.com/markets, you'll get a page like this. And this is just coming directly from Nadex webpage. You can go look at the contract specifications for single thing that Nadex has out there, right? Whether it be Forex, indices, commodities, or even the events, right? You can click on it and we'll kind of break down, what's going to be there, right? And this is what a contract specification sheet looks like. All right, here's the S&P 500. It breaks it down. And again, this is for binaries. They have them for call spreads. They have them for knockouts as well. Okay. Here's where we talk about those 20-minute contracts. And what it does is, again, on the left, it'll tell you the duration. It'll show you when the expiration is. It'll show you where the strike widths and the number of contracts in there. Okay. And then obviously what the trading hours are. So you can see here, there's a, you may say, hey, wait a second, there are some differences there between the strike widths. Yeah, absolutely. Right. The first 20-minute is in prime trading hours. And the other one is every time outside of prime trading hours. And it's less, right? Because there's less movement. And then there's the 2-hour binaries. And then there's the daily and the weekly. And as you can see, the farther down on the list we get, the strike width gets bigger and bigger and bigger. Okay. So again, think about my last slide. You saw when we have the most movement. Then we start looking at this and we're like, all right, it's starting to click. It's starting to click, right? Right. And again, I'm going to show you how to analyze this in a couple slides from now. Now, here's a special one. And I wasn't sure when I put the slide deck together and I gave this out, I was like, man, I don't know if Nadex is going to like me sharing this, right? I mean, I'm talking about some things are really positive right now, and there are some things that are negative right now. Are they going to like me saying that there's not a good thing, right? And here it is, okay? This list varies depending on current notices and strike widths. Now, this is the list as of March 9th, okay? These will continually change, all right? There are times when certain things are good and certain things are bad, and that's my caveat. But I told Nadex, listen, I'm going to tell if something is not good, I'm not hiding it. I'm getting it out there, all right? Right now, well, actually, as of the 9th, there were positive situations inside of the euro dollar, the euro yen, the Aussie dollar, the dollar Swiss, the Aussie yen, the S&P 500, the Tech 100, the small cap 2000, crude, and natural gas. Now, I will explain these in a second, but situations that are not so positive for these shorter duration contracts right now are in the pound dollar, the euro pound, the euro yen, the pound yen, the dollar CAD, gold, and silver. Okay. Now, some of you out there may be scratching your head and be like, hey, I just joined it and he said that those are not good. Here's why. Okay. Inside of contract specifications, right? Kind of back to that. There are things that are called notices. Okay. As you guys know, there are different events that occur that change the volatility of a specific tradable vehicle. Okay. Now, these come out, it's very, very easy to find these, right? Nadex.com/notices, and these come out pretty much every week, I think. I think they're updated once a week. I typically go on and kind of check them out. Now, I'm going to show you the example of what's posted on the contract specifications on the website versus actually there. Now, remember, under a high volatile time, things like an election or like something like Brexit, right? If you guys remember Brexit, there is increased volatility. What happens is, due to the increased volatility, the uncertainty of the markets, the market makers will actually widen the spreads, okay? Now, it doesn't always get updated instantly, and here's an example, all right? If you go online right now, look up contract specifications for gold, you can see that on an intraday basis, it is saying between this time frame, the intraday trades, the 2 hours, they have a strike width of 1, and the dailies, basically the Monday, what is it, 8:30 to 1:30, they'll have a 1.5 strike width. But if you look at your actual Nadex platform, you can see that right now, the 9 to 11, the 2 hours, they have a strike width of 3. And we say, wait a second, huh? Wait, it says 1 up there. Why is it 3? And why is it 6 when it says it's 1.5? Obviously, with everything going on in the market, with stimulus talks and pandemics, the volatility is obviously increased for these assets. And as they move more and more and more, to kind of not combat, but kind of stay competitive inside that arena, the market makers are required to kind of widen those strikes a little bit. So this is one of those things you have to keep on top of. And that's why I said, let me go back, right? That's why I said that right now, gold is technically in a negative situation. It is currently, again, at the printing of the slide deck, the strike width was a bit wider than what I am personally comfortable with. It doesn't mean you can't trade it, but I'm saying for this strategy, it is not the most positive situation right now. There are other things out there that are better. Now, does the strike width change all the time? Absolutely it does. So it's something you have to keep up for and make sure that you're watching those things, right? And this is just one example. And again, I think gold has been quite fun to analyze and be able to trade recently, but you got to make sure you're using the I don't know. You got to make sure, again, we're using the ball, right, versus the cube trying to push it up the hill. Okay. Again, don't make it harder than it needs to be. All right. So you may say, how do I figure out if they're good or if they're bad? Okay. And again, I'm going to use the web page. Again, just double check with the notices or double check inside of your Nadex platform to make sure that these are true. All right. Now, obviously, 20-minute is the shortest duration contract that we can go to for the S&P. So you may say, hey, that's good, right? That's the short duration. I got this. Yeah, I have some really, really fun strategies to do with the 20 minutes, right? I have a couple different lunch strategies that I use the 20 minutes for. But looking at figuring out, all right, I need the most movement I could possibly get, right? Does trading a 20-minute binary with a 0.75 strike width, is that better or worse than trading a 2-hour with a 1.5 strike width? Okay. I would say in this one, you can see which one I've highlighted red, which one I've highlighted green. Think about it. In 40 minutes, you have the same exact strike width. There's two different binary contracts. And if you're really sure, then sure, absolutely. But I would say there's probably a little bit more risk in that one, right? I mean, I have 6 times the amount of time, right? And all I got to move is just a little tiny bit farther, right? The strike width is 2 times higher, but the time value is 6 times higher. And we saw from that description of the S&P 500 before, again, exactly what this is, that 9 to 12 hour, it moved about 100 points, 104 points to the downside. If it's moving 104 points to the downside, am I worried about 1.5 or 0.75 strike differential during that time frame? Even if it only moved 50, am I going to crank through some stop loss, or am I going to crank through some strike widths on the 2 hours? Absolutely, right? So again, it's about finding the proper strike width and have that be aligned with the proper time frame. All right. Now that's how we would analyze this for an indice. Now here's how we do it with the currencies. Okay. People see the 5 minutes and they're like, oh my God, I love these things. These are great. And again, I like 5 minutes, but look at how it is, how it's lining up right now. All right. During the kind of overnight time session where you have less movement, the strike width is only 2, right? 2 pips. It's very, very tiny, right? But there's also not as much movement for the most part. Now, does the euro dollar move at the European Open? Absolutely, right? So could you take advantage of a 2-hour with that? Sure, you absolutely could. But think about the 2-hour, okay? The 2-hour here, it is, the strike width is 4 pips, right? It's double the amount, but instead of being 5 minutes, it gives you 2 hours. Do you guys see how much more value you're gaining in time value? And you really don't have to move much farther with that. It gives you the ability to crank through more stops inside of that time when you have a market that is moving. And again, a lot of people, I'll tell you right now, the class that I probably talk about the least, but the most people sign up with for me is typically the 5-minute binary courses. People are drawn towards it. And at one point, I absolutely, this is all I did. I love 5 minutes. I thought they were great. But now when I do more, analysis on it, it's like, listen, I mean, I could trade that one, but I'd much rather have the additional time. I have an hour and 55 minutes longer to be right, and I only need to move 2 more pips, which is like nothing, right? So again, it's about finding the perfect opportunity. Is there a time and a place for the 5 minutes? Absolutely, right? Absolutely. But again, if you're trying to give yourself the biggest bang for your buck, giving yourself the most cushion, the most, I guess, probably, most potential, right? Which one do you think is better here, guys? The 5-minute or the 2-hour? Okay, so it's not just about the shortest short, right? It's about how do I have the best blend of time and strike width. You should know I don't have a chart up. The chart was from the picture before. So let's talk about this. Is there a golden hour in trading? And again, I didn't create the term golden. You guys have heard this in many things. There's a golden hour in photography. In medicine, there's considered a golden hour. Sometimes it's golden 24 hours. Basically, what I mean by golden here is there a time that gives us the best opportunities, right? The time that's going to have the most volatility, the most volume, right? Is 4 o'clock in the morning the ideal time to trade the markets? Most times, no, right? Because there's extremely low volume. There's not many sessions going on. Like 11 p.m. at night, is that the best? No, not at all. Nobody would say that, yeah, this is the best that there is. No, so I always get a question about what the best time of day to trade is. And I would say, I mean, obviously this is pretty simple, right? I would say that the overlap between London and New York, between this like 8:30, 9 o'clock and like noon when London closes, that is the time that internationally is recognized as the most volume. The UK session and the New York session are the two biggest ones, right? Those are the two biggest sessions, because obviously the third one is the Asian session, which is less. It's sitting in Tokyo. But it's the overlap with the US stock market as well. So it's a double whammy for currencies. It's the US kind of open market. Again, it's the most volume that is being traded throughout the day, right? Is in that time frame. So is there a golden hour? I'd say no. Is there a golden few hours? Yeah, there's one that will give you the best opportunity. Is there any guarantees that that's your time that you're guaranteed to make money? The answer is absolutely not. There are no guarantees in the market, right? Don't believe anybody that says that there is. But is this a time that you can put yourself in an environment where there's a lot of movement? Remember, there's two plays here, right, guys? Are we finding the right vehicle, but are we also going down the right road? Can you use a 2-hour binary from 3 to 5 in the morning for the UK Open? Absolutely, especially if you're a currency trader, okay? But after that, between 5 and 7, is there as much opportunity? Not so much, right? And then about 8:30, 9 o'clock, the US trader, starts stepping into the market, and volatility and volume starts picking up again. So again, that's kind of how these are played off, right? So here's an example. As I mentioned before, there are two main times where we can use these short duration contracts, all right? I'm going to start off with the one that most people are familiar with, the S&P 500. For you futures traders out there, it is the ES, okay? Here are 3 charts, 3 different examples: January 15th, February 10th, March 5th, okay? 3 different days. Now, looking at the bottom, you can see the contract specification. You can see that the strike width is 10, the number of contracts is 5, and they go over a number of preceding, obviously hours, right? As you can see on day 1, right? This was a situation where in 8 bars, it moved a, 39 points to the downside. So it moved almost 4 strike prices worth of movement on those 2-hour contracts, all right? Good day? Sure, absolutely. And what did it do? It did nothing but drop all the way down and then come all the way right back up again. But it moved almost 4 strike prices to the downside before turning and flipping and coming all the way back up, okay? Now again, the red box there is the 2-hour binary, okay? Number 2 in the middle, this one moved a total of 47.5 points to the downside, okay? Starting at 9 a.m. and closing at 11 a.m. And again, dropped all the way down, came all the way back up again. But it moved that many contracts that fast. And again, for those of you that are new and you don't understand contracts in this, right? When you're at the money, the bid and the ask tend to be right around $50. But the farther you go away in the out of money direction, they get lower and lower and lower, okay? My homework to you, if you're unfamiliar with those, in 4 slides from now, I'll actually show you kind of the strike setup on the side. You'll see it doesn't take more than 2 or 3 strike prices before the risk, right? The most you could lose on that trade, not including the fee to get in, gets down into that like $16 to like $20 range. For those of you that understand binary contracts, remember at the end of the contract or when you take it out, it's 0 or 100, right? If you take it off earlier, obviously it's not at 100 because there's still some time value, but say you got into something at, I don't know, $17 worth of risk and you had a collapse of 47 where it dropped 4 strike prices to the downside, could you take it off at say $80 or $90? Sure. Risking 17 to make 80, is that a good risk to reward return? Right? Could that be your target for the day? Sure. And you're out in less than 2 hours. Look at the last one, same thing. This was March 5th, right? 2 hours, 9 to 11. I tried this one to kind of show you as much as I could. I dropped it down, used 5-minute candles on this one. This moved 67.5 points in 2 hours from 9 a.m. And again, 9 a.m., the open hasn't even happened yet. If you wanted to wait till 9:30, you could, right? But from 9 to 11 in the morning, it has a strike width of 10. This one moved 6.7 strike prices in the other direction. And it basically closed at the low. So if you wanted to, If you wanted to hold this one till expiration, could you have gotten this one pretty cheap between, say, $16 and $18 worth of risk and gotten 100 out of the other side? Uh-huh. So you guys see now? This should help bring the picture in here about using these shorter duration contracts, particularly binaries, right? Could you have done the same thing with a call spread? Absolutely. There are 2-hour call spreads you could have done the same exact thing for. And call spreads are actually a little bit different. You don't have them as much as at the money, but if you can catch those near the floor or the ceiling, they trade more like the underlying asset. You could take them off at any point. I mean, you could be risking, $11 instead of risking 17, right? And when it claps through, bam, take yourself out early when you get, 3, 4, 5, times, risk to reward ratio. Again, is it guaranteed to do this every single morning? No, you have to find the opportunities. You have to make sure you can manage your risk. There's a lot of moving pieces to it, right? But this is for you US based traders, or, if you're not on the East Coast and maybe you're able to trade from, if you're central or on the West Coast from, 8 to 9 or from 7 to 9 or something like that in the morning. Heck, West Coasters, this is before you guys go to work. Could you take advantage of this? Yeah, I hope so, right? So again, a lot of opportunity in here. Now, for you other traders out there that are not just US, kind of focused traders, here is the currency market, okay? I don't care where you live. This is the European session open. And I wanted to put this in there, and not everybody will trade the UK session, because again, it is pretty rough. If you're an East Coaster, this is quite early in the morning, right? Quite early. You can see how much movement we have. And again, if you don't know Forex, I can't teach you about it today, but 31 pips, right? The first chart on the left-hand side, the blue box, in 2 hours, it moved 31 pips. The strike width of the 2 hour, right? The 3 to 5 in the morning is 4 pip strike width. So it moved over, almost just over 8, right? The middle one moved 32, another one that moved over 8. The last one moved 52 pips. Right, 52 pips, it went over 10 strike prices to the downside. Right, 10. So could you have gotten a cheap out of the money on that one to take a shot at that one, continuing the downward trend? And what happened? I mean, it went 10 strike prices to over 10 strike prices to the downside within that 2 hour time frame. All right. So again, session opens are an absolute must when you're looking at this strategy. And again, do you have to trade just the UK one? No, but if you do trade it in currencies, particularly the euro dollar or the pound dollar, actually euro dollar, pound dollar is on the no-no list right now. But you can definitely do it with the S&P. As far as news trading, can you use the same strategy? What happens with news? News is when you tend to get large explosions in price, right? It acts as a catalyst. All right. If you want to do the same thing, just like I just showed you how to do it with session opens, with news, all you need to do is have one thing, a couple of different things, right? One, you got to know when news is, right? I'll show you how to find that in a second, but you need to have an Excel spreadsheet. Track what the average move looks like, how far it is, right? Do it on an online charting platform. If you don't have it, go over to like IG.us. Go to any of the online charting platforms. Chart what the normal move looks like every single time, and you'll get a feeling for what this looks like about where you can put your strikes. Look for a risk to reward tool. Make sure that the average movement is at least a 1 to 3 risk to reward ratio. Look at a calendar, an economic calendar, right? What I would say is spend 60 minutes a weekend looking to see where all your news releases are for the week, so you can dive in there and go ahead and take advantage of them. And then also have an ATR tool of some sort. Again, if you're not sure about ATR, what I would do is go to these 2 previous Nadex webinars I did. Again, go to Nadex, go to Learning, click Webinars, click Archive, and you should, under my name there, look for Mastering Average to Range and look for Parabolic Retracements. Both of these will tell you how to find the ATR. And again, the same short duration contracts I'm talking about now, use in both those situations, okay? This was kind of a way to kind of speed through it a little bit. Now, where do you find news? Here's your here's your hour worth of homework on the weekends. Go to IG, right? I'm sorry, go to dailyfx.com. Go to economic calendars. It's on the slide bar. Go down, and here you can get the last 7 days, yesterday, today, tomorrow, the next 7 days, anytime that you want. It even gives you the ability to set an alert when news time is coming up, okay? You can sort this by importance, high, medium, or low. You can do it by country. This is how I dial it in and spend like an hour, looking at these things total. Is I look at the beginning of the week on Sundays when the ideal trading opportunities are, and it either alerts me, or again, I know I typically have it written down because I do a weekly plan, okay? Now, here's what that news, the kind of the news trading that I'm talking about. Here's the situation with Australia. Now this was 7:30 p.m. at night, and people are like, you can't trade at night. Really? I knew that news was coming up. right? They had an unemployment rate. Now, I don't care what the unemployment total was. I just knew that there would be some movement off of it. It's one of the ones that I do track. In this 2-hour binary, it moved 22.8 pips. You may think, is that a lot? I don't know anything about pips. It is. The strike differential on that 7 p.m. to 9 p.m. is only 4 pips. It moved 23. It moved 5.7 strikes. Now, look on the chart on the left. You can see right around that 50-50, the one in the middle, the 73.38, 50-50 to 53 is about, that's kind of where we are at the money, right? Go up like 3-4, you can see that the risk on that was $19.25, right? Same thing, go to the downside, you can see that it's $83, right? Meaning that I had $17 worth of risk. But guess what? It moved 22 pips to the downside, right? Did it move? Moving 5 strike prices to the downside, did it drop below that one? Absolutely. So in this case, it was a $17 risk trade plus the cost to enter the transaction, the dollar. It dropped 22 to go past that, which means I capture what? $100 on the other side. So figure out the 17 pip risk. I'm sorry, the $17 risk for the $100 reward. Is that something that is good to trade? You guys make your mind up, right? Now, this is just one example of it. Again, I can give you another one over here. Here's the European move. This is actually U.S. retail sales. What did it do? It ended up dropping at 7.7 strikes, 30 pip movement in 2 hours. And again, you guys know how to find the strike differential. Right now, it's currently 4 on the 2 hour. Do I care what the news is? No, I just know that it's a high impact news release, and I know that it dropped extremely far, extremely fast. Does it happen every time? No, but if I'm in there risking $17 and I take a loss, is it the end of the world when I can capture 100? No. If you guys want to do a little bit more homework on that, what I would say is go in there and look and know your news. See how often when you click on any of these news releases, it will show you how often the news is correct and the news is wrong. I'll tell you right now, you may be surprised. Most of the time, the forecast is wrong, and that's where the catalyst comes from. Dive in there and look at your strike differentials, whether it be the pound, the S&P, the Tech 500, the euro dollar, the dollar CAD. Nadex offers so many different things to be able to trade, and again, use those short durations in there. Now, here's a breakdown of what we covered. I know it goes quick. My time is already over. We talked about what are short durations. We talked about the potential advantages. I showed you how to find the contract specs. We talked about how session openings are the best times because those are the most reliable. They happen every day. But when we have news trades, you got to get in there and trade those news trades because they act as a catalyst when they are wrong, which again tends to be more often than not. I'm going to leave you guys with this. This is a quote from Wallace D. Wattles. It says, "It is essential to have good tools, but it is also essential that the tools be used in the right way." Think about my analogy. Think about my analogy about pushing a ball up a hill or a cube. And again, trading is basically the same way. Now, if you have any questions, you guys are more than welcome to email me, support@keeptradingsimple.com. You can check out the website, keeptradingsimple.com, or even better, make sure you guys dial in. I go live on Nadex's YouTube page every morning from 8:45 to 9 with Todd, and we break down the hottest opportunities for the day. Hope you guys learned something today. And again, I will catch you guys tomorrow.
Outstanding. Thank you a ton, Brian. I mean, it really insightful on how to dial in and focus on opportunities based on strike widths and expected moves based on average true range and targeting the right duration. I will tell you, I know that you've given us a lot of feedback, and it's a bit of a manual process right now in terms of number of strikes that we list and the widths based on volatility. We are working to automate that process so that it's just a calculation in every day based on volatility. And it'll adjust accordingly. So stay tuned. I know it's something that we are working on so that it is much more dynamic to try to make sure that we have the properly sized products for the markets depending upon conditions. So certainly something that we are working on.